The Warriors, we're in the dog days of summer. How's everyone doing today? Ingmar, Steve, how you doing? Ryan, Paul, Nash is saying hi to you. Ryan, K-Man, Mike, Glenn, James, Hugo's here. Ran is here. Rough days, rough. Hi, Will. Parth, how are you? Okay. Blake is back today. Hi, Blake. Went through one of those thresholds with his son this weekend. How's it feel? Surreal still?
About what, Dale?
The threshold you went through with your son this
Yes.
weekend.
Yeah,
Uh,
yeah. It's still, as a parent, dropping your youngest kid off at college is definitely surreal. Haven't
yeah.
haven't fully processed it yet. My wife likened it to kind of dealing with it's like a passing, if you will. It's
Uh,
like, you
it's a
know,
stage. Yeah.
it is. It's a
It's
big
a
stage, right?
letting go.
It
Yeah.
is. It
Anyway,
is.
for control freaks like us, we don't like those kind of changes.
No, no, no. I
Any-
agree.
Anyway, it's good to have you back, buddy.
Thanks,
So,
buddy.
we have some dollar weakness here. I'm looking at this broadening top type of formation in euro, and my vibe was that we still could challenge these highs again because of this formation. That I think there's one more trip down um, on this dollar, maybe down to 97.30 ish, 40. Just one more drive down here, and I'll try it. And what's going to be if this sets up, it's going to be a pretty tight risk stop because you don't want to see this low taken out. Okay, this ends the bull case in the dollar for now, and most likely means that that 96 low is not the low, and there's another one coming. But what looked most textbook to me before I talked to the team was this. I mean, it's right out of Edwards and McGee, right? So we had the head and shoulders breakdown, and now we're having a test of it right here. And we never fulfilled the objective of this. Okay, that comes in at 410. So perhaps this is just ABC to a breakout. And, if I was a no trader, I'd buy him for a trade, looking for, uh, say, 410 on the 10-year, which has me bearish in position on the short side of yen. Um, that's that's what I'm doing here today, and waiting for the dollar to see if it gets down to those levels. So, EG, held where it had to. Ryan, is it starting to look a little better to you now after a couple days action, and you saw the reaction off 86? This give you a little more conviction about that number, that level.
Is that me, Dale?
Calling Ryan. Yeah,
Yeah, I'm here. Can you hear me? Can you hear me?
yeah, we got you, buddy.
Yeah. Oh,
No,
yeah. Hi, mate.
I'm just asking about since we have had a nice bounce off the 86 level, which was your
Yeah.
level, and you added down there. Does this action the last couple days help build confidence in the trade, this bounce that we've had so far?
Yeah, it certainly improves it than going down through 86. Uh,
You mean you would have had less confidence in it if it was at 85.50?
yeah, it's my confidence-ometer. It's a bit swingy.
So that's
Um,
kind of a rhetorical question.
yeah.
It's like asking someone, do you have more confidence in your trade when you're up 50 pips than
Or
you
down
do
100.
when you're break even?
Exactly.
Anyway,
So the answer is still yes.
yeah,
Yeah, it's a nice little step up. If you look at when we had a move down, it stopped at 86.20 before
yeah,
hitting at 86, and now we've bounced back up. It's holding at 86.20 again.
yeah,
I've got a zone here, 86.45 through to about 70. That's a bit of a pivot zone. Yeah, it's looking all right. I'm not gonna do cartwheels over it. We've got CPI tomorrow from the UK, and if that's a hot number, then we could yet see a retest back down to that 86 level, or maybe even go through it, depending on how hot it is. But I've, make hay while the sun shines. I've taken a bit of profit off my last entries at 21 and 05. So got to put some in the bank when it's there.
Okay, so even a day when the dollar's down, USD CAD is still up. So he had a lot of resiliency even when the dollar was weak. Canada's held up pretty good. And when the dollar's been weak, Aussie can't get its butt off the chair. I mean, we're getting some pops in cable and euro. And yesterday it was the one that came in not the weakest, but it's like in quicksand or something.
Yeah, it might do something. Again, it's hitting all these little small levels. Like it was 138, 138.10. We got through that, then found resistance 138.20. We've tried poking through that today. Can't do it really. You're right. It's in quicksand. But if we can build a bit of a base like it's trying to today, 138 and 138.10, then it should push on probably till about 138.50-ish.
Yeah, the quicksand comment was on Aussie that you're
They're
getting like
they're all the same.
Well, I mean, true. Yeah, I guess you could say inherent weakness in commodity currencies right now.
Yeah, gold's looking a little bit less. I wouldn't say it's not looking. I wouldn't say it's looking weak, but it's looking more like it wants to go back under this 33.30 area than stay above it at the moment. But it's probably going to take a catalyst to really get moving one way or another.
All right, are you breaking out your big bear claws for the S&Ps up here?
My big bear claws, my big bear pants. No, but we're sitting on that prior high, aren't we? Just at the end of July. So it could be a bit of a make or a breaker in the short term. If we're breaking back below there, what is it, 64.40, 42-ish? Then it might look a bit weaker because we've stopped making new highs now. So, but it's hard to pick a side in this right now in these markets.
This is what led it. It was the outperformer from the April lows, the semis. Okay, and they're not close to making new highs. Now Nvidia is, and it has earnings next week. But I was thinking that just a little correction that you could see 260 again on the semiconductors, and even back to 250. I think they'll lead in the correction if we're going to get one here too.
Good eye, mate. So, good eye.
Could there be any tariff stuff that could affect it at this point?
Yeah, well, he's still waffling on about throwing stuff on chips. He's what? He's going to take 10% in Intel. He's telling everyone. He's trading it like the rest of us at the moment, isn't he?
Yeah. Has that ever happened before? Where governments just become partners of corporations?
Only when they're bailing them out.
Huh?
Only when they're bailing them out, like what happened with the banking crisis.
Yeah, this is the opposite.
Yeah.
This could drive them into bankruptcy. Anyway, that's it. Bitcoin, still trying to recover, but I don't think it looks great. I think it might be signaling something in the S&Ps. So I'm not looking for a crash in Bitcoin. I don't think this is it. But you have two drives. You have divergence. I don't know. I have a hard time wanting to be long anything right now. You guys feel that way?
A lot of eyes on that 112, isn't there?
Yeah. 112 was a big area. We had this. And I want to show you long term in Bitcoin. So yeah, 112 was the buy, and we did have divergence here. But check this out. And no, everyone has much higher levels for where Bitcoin's going this year. I'm hearing 160, 158, 175. But look at this weekly RSI chart. That's not I mean, I don't know where it's going, but that's not bullish. Some huge trend line, and this divergence was at 70. So I don't know. I'd be careful with this. I think, maybe there's, we have the introduction of stable coins coming in. I don't know, maybe there's going to be um, some kind of negative news in the crypto. I mean, who's bearish Bitcoin?
No one.
No one.
And that's when you get your ass kicked.
Yeah, and isn't there probably more bulls in Bitcoin than gold? Wouldn't you say? Or about even?
Well, depends if you're talking monetary wise or just position wise.
Sentiment, yeah,
Sentiment.
just people,
Yeah.
retail that they both are very emotional about both of the instruments.
Yeah.
It's not just a trade. It's even more than what you do, making it a lifestyle. It's a religion.
It's a religion. Yeah, it
Yeah,
is. It's
that's
a
what it
cult.
is. That's why they get so pissed off if you talk the other side of the market,
Well, you better
even for
stop them,
swing
Dale.
trades. Yeah,
You better stop it.
you know,
Blake will get a
someone's.
load of complaint letters.
Well, yeah, I remember the NFA. So, oh, they just come knock on your door and see if you're missing a timestamp. So, I've been through it. Anyway, good talking to you, buddy.
You too,
I,
mate.
I you know, I talk to you more often because I want to make sure I'm capitalizing on the time that you're here. All right, man. No,
You got
some
me
good.
until
Uh,
Thursday, and
all
then
right, all
I'm off Friday again.
right, all right, all right. Do you have conviction about anything? Like someone said, Ryan, I just deposited 10 grand in my account. Any feelers you would put out this week? Because when I look at my screen, sometimes there's a second or two between trades.
Mm.
I mean, see how the ticker is moving? You barely get a pip, and then it does nothing for a second or two. It's really not. They're really kind of crummy trading conditions, aren't they?
Yeah, it's really, and we said this a couple of weeks ago.
Yeah,
You've got to pick your levels that you will absolutely want to trade. You don't want to get stuck in the middle of stuff, and yeah, you can scalp around because you get intraday ranges, but it takes us one little headline and the range extends or whatever. So I don't have that much conviction over price moves, but I've got conviction over some of the
levels.
events that are coming up. Like Jackson's Hole.
Oh, okay.
We've got a market that's really dovish for September.
Right.
85-90% probability that they cut in September. A lot of that is cemented by that jobs report. I don't see Powell panicking over the jobs report while we're seeing 4 months of rising inflation. So I think that's we're going to get a price adjustment one way or another, probably on Friday.
Okay. Bianco is putting out videos that it's going to backfire, which we have seen before. I think wasn't this the last easing back here? Or it was last year. Well, remember they were easing and yields went up last time. So maybe that's what Bianco means by it'll backfire again. That the market won't like it, the long duration at least.
Yeah. Well, I
What do
can
you
see
think?
those if he pushes back against those cut calls. I can see those yields maybe knocking back up to 440, maybe even going back up to that 450 range that we've been looking at for so long.
Okay. All right. Thank you, Ryan.
Pleasure,
Thanks,
mate.
buddy. K-Man, good morning.
Morning.
Any levels in gold or silver for you?
No, we are still inside that range, as I've been saying.
Yeah.
33.0510 and 33.70.75 gold for as long as we're in there. It's a range. It doesn't look like there's too many buyers around for the time being. That is true. So probably living on a bit of hopium that there is a sign of a deal coming, or perhaps still Jackson Hole.
Yeah.
Powell won't say anything. Um, Silver still holding better. Short term, 37
It
three
is.
quarters already held. But again, it's within the range. We need to break above 38.5, 38.80 to get going again. Otherwise, there may be a chance to go and have a look at low 37, even high 36s. But really, I mean, it's every time we look at it, it's trading just above that 38 level, and yeah, there's not a lot to talk about really right now. When in the market, yeah, it looks as
They're
if.
selling rallies here, Kay. Doesn't feel like this just happened. We're up 8,
Hmm,
9, then we're up 3,
yeah,
now 4. There is some selling coming in.
yeah, there is indeed. But then
Yeah.
there has been selling as well. End of July. There's been selling end of June,
Yeah.
and then it bounces. So yeah, you can. And I'm not saying you can't really sell into it. I mean, it's probably for now. If you look at the short-term picture, yeah, we're finding rally sellers, like we're finding deep buyers on other dollar pairs, like the commodity pairs, the dollar yen, for instance. This yeah, yields are ticking up, but where are they going to? And to me, there's not too much. Well, but there's not
Yeah.
too much of a short-term really trade in there. I really want to see whether we are going to break those ranges, in gold and silver as well. But I'm more tempted to pick up the dips in silver right now still than I'm in gold for the time being.
Okay. I just wanted to bring up nat gas because it's been under a lot of pressure. I mean, I've a line all the way down here at 2. I really, it's hard to imagine it getting there, but it's still going to be higher lows. I remember this was a very nice move last year, so I'm starting to stalk it for something here, nat gas. One other thing is at times, not always, it trades inversely from risk. So something else I'm keeping an eye on. A little nat gas for you. It's a bridge between for all the data centers and demand for electricity. Uh, Before everyone has the new technology, nuclear reactors, natural gas is the only bridge that we have.
All right, Dale, we've got Grega here today as well.
Oh, okay, Grega, what do you think of nat gas?
Hey, actually, I'm
How
just
are you,
looking
man?
at this chart since you opened it, and I think that we are here in temporary retracement. Let me just open the screen. Okay. Can you see the screen? Yes.
Yeah,
Yeah, so I think that we are here in a deeper retracement. We have some support down there at the 78.6%. So still some room for this wave C to extend lower, but we
so
know
you
how
do
bad.
have $2 it could come down to almost. See, at 211 to complete.
Yeah, this drop, and we know how natural gas moves. I mean, it's very volatile in both sides, so I would not to stick with any kind of a direction that would last here for longer. I think that we will continue to be chopping around here. So if we get anywhere closer to this 2023 2024 swing lows, I just think that we will see a rebound. Maybe this will occur during winter months based on the current positioning on the wave
Was
principle.
if we bottom there at the end of C, are we setting up wave 3 to the upside?
No, I think that it's so
Another
hard to
ABC?
Yes, I would say that only a temporary recovery, then maybe a retest of $5 up here. But overall, as I
Okay.
said, it's really hard to find a real directional trend on natural gas that would stick there for longer. It's just too volatile.
Even that rally last year, it's from September, November. It seemed pretty impulsive at the time. The first wave out.
You mean
Yeah,
here?
you had a 5
Yeah.
wave advance.
Yes,
Okay.
but as I said, maybe just temporary recovery. I don't, my
Yeah.
style, I don't want to predict too far into the future something.
Yeah.
Say that we go for a wave 3 here. I just
Mm.
want to be more realistic rather than
Okay.
something.
I appreciate the input. Thank you. Hope it helped others too. Help me. Go ahead, and I know that you have things
Yeah,
that you
I
want to
was
talk about.
yeah,
Go
I
ahead.
was away for what, for 2 weeks now. So
Yeah.
maybe just to give you some updates on the fresh look here. I mean, we basically on the dollar didn't move much, but if we start with the US yield, I still think that that's a triangle that will eventually take us higher. We know that there's expectations that sooner or later maybe Powell will cut rates, but if they're still undecided, maybe they will be just, even if you do it, one and done. And in my opinion, still, I don't believe that we will crash to the downside on the yields. I think that we can find the support around 4%, but still
I
some room
like
for
that.
this weakness
Yeah.
maybe that could show up.
Yeah, that's a count from the Head and Shoulders internal one that we had. It came
Yeah.
in at 410 was the target.
Okay, so right around this trend line. So
And
I
then
think
new highs, in yields.
yes, I think that there then we could see a reversal higher. I'm also looking at the structure with the dollar itself, and I also think here that the dollar is missing one leg to the downside to complete this ending diagonal that I will show you in a second.
Yeah.
But before that, maybe even looking at the TLT here. So when the US yields completes this triangle, TLT, I think that also will resume to the downside. Maybe till then we'll be just chopping around here for this subwave 4, but definitely still an incomplete downtrend on this one. So if we see US yields in the near term for a drop towards 4%, I think that dollar asset is going to see one more leg to the downside. So here I'm tracking an ending diagonal, which is very powerful reversal pattern. Okay, so I think we have to be very careful up down here, especially if we consider, let me do this type of overlaps. So it looks like that bears are still here, but they're already struggling because we have seen some serious rallies over the last few weeks. So I think few months. So I think that we are really in the late stages here, and that there is definitely not any strong downtrend happening right now if you compare to the previous drop from the first half of this year. So in my opinion, this ending diagonal could really cause a very strong reversal to the upside, and it could be one and done. It was something similar back here in September of 2024 when they cut rates, but then market completely reversed this cycle, and it's something similar I would be expecting here. But for the short term, as I said, there is still room for more weakness. So since we know that there are a lot of daily traders, I just think that maybe as long as we are trading below this 100 region, and since we had only 3 waves up, I think that selling rallies for a new low still make sense. Also, if you take a look on euro dollar, we're just trying to retest this upper trend line of this corrective channel. So another leg here and a push towards 119, 112. It's something that I'm expecting, but then I would be very careful up here, especially when maybe trading conditions get back to normal in September, Powell's moves, and market also maybe will change its overall direction. So despite euro dollar being bullish, we again are coming into very late stages of recovery. Tomorrow, I believe, or it was today, I believe tomorrow, UK CPI, or it was today. Ryan will know that.
CPI is UK CPI is tomorrow. Yeah, tomorrow
Okay,
morning.
it's tomorrow. Yeah. So I think that here we have some very nice bullish trend developing. We had a very beautiful ABC drop, perfect rebound from that swing support, broken channel. It's an impulsive recovery. If we get something similar like this correction here, it could be setting up some head and shoulders continuation pattern, and then I think that on drop into these support levels could be quite attractive for the next rebound. We'll see if maybe CPI could cause a slightly deeper pullback, as I know that traders don't expect any kind of rate cuts this year, but we'll see if maybe CPI could change these flows. But overall on dips, I think that there can be some very nice technical support. Also, if we take a look on dollar yen real quick, here we broken out of this wedge recently, and now we are just consolidating. So I think that the dollar yen is maybe setting up some triangle potential for a wave B, but even 148.50 retest of 149 would still be very nice resistance for this sell-off. So the idea is that that was an impulsive sell-off through the trend line support, and now we are just trying to retest some resistance levels in this consolidation that could take us possibly even lower. I don't think we have a lot of, I believe Blake will take the screen. So just one more thing I want to take a look at. Dale, earlier you mentioned Bitcoin, right?
Yeah.
So here's basically in green, you can see that the bull run always lasted for around 3 years, 35 months. And since this is not up to date, we are at the new highs now. But if you will calculate 35 months from November 2022, the end of the bull run based on this cycle come in this year. So October 2025, it's not that far away, and we are already at the new highs.
Yeah.
So I would be
Great
very
chart.
Interesting.
Yeah.
Really creative.
Yeah. Very nice.
And by the way, we also have a potential ending diagonal as well here. So this is not something that where you want to get involved. I mean, if someone don't have any plans for their money for longer term investment, then maybe this is not important because overall market moves ups and downs and they will accumulate more on dips. But if someone is now riding this trend for the last year, 2 years, and looking for exits, I mean, definitely not too late maybe to book something up here and let the market do the rest. Of course.
Hey, Grega, I gotta take over for the data that's coming out, but let me ask you. We just had this false breakout above like new trend highs. Would that qualify as finishing off wave 5?
I think it can, but I want to see maybe a drop below 110 to make sure that we are really topping out. For now, it's too soon. Maybe Bitcoin will stabilize here, but opportunities still can be discovered on some altcoins. For example, Ethereum, in my opinion, is still very interesting. You have some gaps here on futures. At the same time, just one more thing.
So Bitcoin could peak and the other coins could keep going.
Yes, exactly. And it could just move in consolidation. Keep in mind that Ethereum moved close to these highs, but still didn't take these highs out. So I'm thinking that this is yet to come in the near term. So if Bitcoin will just consolidate, I think that Ethereum could be the next still mover into this fifth wave for a push to new highs.
Got it. All right. Thank you, Grega. I'm sorry, real quick, because we have less than a minute before data comes out. So just a heads up. Appreciate your update. Just real quick, dollar CAD, we have Canadian CPI coming out. I'll be watching this one really carefully because it's been obviously in a tight range, came out of a wedge and triangle, but it's weak Canadian data that's going to get us a close above 138, which I think is going to be pretty key today. But we're going to, shift focus over we got the dollar index right on the left. The 10-year, sorry, I'm thought I was sharing my charts and I wasn't. We have the 10-year right here and the S&P 500 off to the right. I'm sorry, I thought I had showed the charts, but I wasn't. But now you guys can see what I was looking at. Sorry about that. So heads up for data. Here we go. All right.
Softer than expected by the looks of things, though the core measures are holding up. Headline came at 1.7 versus 1.8 expected.
All right. And Canadian CPI came in a little softer and the dollar CAD isn't moving a whole lot. I'm long. I'm long from yesterday and looking for this close above 138.10. That's kind of the level that I've been staring at because it's right around this, horizontal resistance. But as far as everything else goes, I mean, I mean the dollar's
We
firming
had,
up
uh,
just a bit.
we had starts and permits as well. Starts came in
Yeah.
very strong, 1.428. Permits, slight miss. But
You
holding
know,
steady.
and when you're talking about, housing data, obviously it's one of those things that I can't tell you. And Dale, you probably heard this. I mean, we have what's the Melody, right, that comes on
Yeah.
here.
Yes.
But if you can listen to her or you can listen to any other housing analyst, everybody's expecting a crash, a housing crash. I really think that that's very far-fetched. And the reason why I know demand is slow and I understand that. We still have an inventory problem and frankly, just people aren't willing to give up their mortgages unless the labor market really comes unglued, which is possible in the next year or two. I just don't see housing prices really doing a whole lot. And so therefore, all the housing data everybody's looking at very carefully, but everybody that's predicting a crash, I'm not there yet. I mean, maybe I need to see more evidence of it, but obviously housing data is going to move the needle a little bit here, and we're seeing the dollar firm up. And I think one of the big, uh,
Prices are peaking out here, Blake. I
oh
talked
yeah,
to a
they're
bunch.
peaking.
They're
There's a
down
difference
10,
between leveling
20%.
out and crashing, right?
10, well, it's already 10% here in
Again,
10,
there's
15.
te- when you've had houses double
Right.
in value in 4, 5, 6 years or whatever it is. Yes, to have a
You,
10, 20% correction, it's a correction. There's no A crash is a much different,
okay,
you know,
what's the number for
well,
a crash? 50%?
I don't know, maybe yeah, 50% I guess would be like panic. But, I
Mhm.
don't think anybody who I mean, if you're looking at the housing market and you're just expecting, a big 30 or 40% correction, I mean, look, we got coming in the rearview mirror or coming behind us. Yeah, in the rearview mirror is going to be, rate cuts. And realistically, we're probably going to see realistically over the next year and a half is we're going to see 1% or 1.5% of cuts. And, it's going to make housing a little bit more affordable and allow people to move. And I think, you're going to see the housing market, remain fairly stable as a result of that. So I don't know. I'm not a doom and gloomer when it comes to housing.
Oh, you're
So
talking your book.
no, not necessarily. I've said this for the last couple of years. I think this is a lot like the 80s. And I'm not a real estate investor and I'm not, like my house, I own my house and it's not something I bank on. It's just something I just don't see it. I see it really a struggle for a lot of these youngsters, and I have a lot of youngsters in my family. When I talk about that, it's like
Yeah.
the 20s and early 30s. They're just saving and they're just waiting for the right time to buy, and they don't want to be in apartments. They don't want to be, you know, I mean, they want to buy. I
Right.
think there's a big swath of buyers that's just waiting for the right time. So
Yeah.
anyway, I'm not a doom and gloomer when it comes to housing, but it's numbers that people are very, very focused on, especially on days like today when, you know, economic data is, where everybody's clinging on something to trade. But one thing I do want to focus on again is the dollar CAD. I think this is a very bullish. rounding bottom that we're trying to develop here in the dollar CAD after having a very strong correction. I think these are important levels to hold above the 138 and 137 level. And I think it still looks constructive for the dollar. And by the way, I know we've talked a lot about this, and I know the guys, I mean, everybody that's in the Forex Analytics chat room knows this. Sterling's stalling up here, and I think it's worth noting, especially with UK CPI coming in tomorrow, which Ryan and I believe K-Man talked about as well. So some data we should be paying attention to. Anyway, real quick before Dale, is your guest here?
No.
Oh, okay.
I've sent him a DM. I haven't heard from him yet.
Okay, well let's take just a couple of minutes just to talk about a few other things.
Anas is there, guys, huh? Anas.
Yeah, he's here.
Yeah.
Oh, you see him.
Anas
Okay.
Al-Haji?
Yes.
Yeah.
Yeah, I've just promoted him to panelist.
Oh, Anas, yeah, he's
Okay.
Anas. You gotta accept. It's always nice to have Anas here, especially with crude oil. And since he's here, I'm gonna get ahead of Anas really quick and talk
I am here.
Oh, great. I just real quick, just technically speaking, we've been looking at, crude oil as far as a breakdown. It's been a nice. Now, it hasn't been a fast move, but the hold below $64 over the last couple of weeks in WTI has ushered in a little bit of selling. I think $60 is going to be a pretty big level. A lot of analysts are talking about how big the 55, 54 level is in WTI. So really excited to hear what Anas has to say. So make sure you all stick around to hear. But before I let you all go, remember, we are in the midst of our summer sale. We've been holding these prices for the last couple of weeks because we know so many people are on holiday. Take advantage of, taking advantage of the 2019 pricing of Forex Analytix. Lock in your low prices, because when the season starts back in September, prices are going to be back to normal at $150 a month. So, take advantage of the tool and the chat room that you have here, and the live squawk feed, and all the different central bank pricing tools that we have, all sorts of fun stuff that we have here on Forex Analytix. So with that being said, Dale, it is all yours.
Okay, thank you. Hi, Anas. Great to have you back, buddy.
Hey, how are you? I've been here all along, by the way. I've been listening, and I don't know what went wrong in the beginning.
It's probably me. At times I have old timers. So anyway, buddy, I know you're constructive the market, and a lot of people, like you just heard Blake, everyone's bearish, mainly technicians. So what is your bull case? And also a comment on the frustration of getting bad information, that it's hard to trust sources nowadays.
Yes.
That's
So
something I
here's the
haven't heard
deal.
from you. Yeah, go ahead.
Right. So here's the deal. We always read the news and we comment on news, we say things, etc. Then, based on demand from several of our followers, we created the Daily Energy Report. And the Daily Energy Report basically focuses on the news, try to explain them, check the reality of this news, etc. And as we follow the news closely, we became literally kind of, I won't say sick of the news, because
Yeah.
the level of lies and the level of biases, I mean, whatever we knew before, multiply that by 1,000.
Okay.
So it became extremely painful to work on those daily reports every day and discover the fake news. I will tell you a couple of them today, basically. To go back to oil prices, it's unfortunate that our prediction basically did not materialize. We thought prices would be $2-3 higher than the current level, but there is this massive bearish sentiment
Yes.
coming from all sides.
Everywhere.
And I can tell you it is a manufactured sentiment. And I'm going to discuss that, and I will say why it is a manufactured sentiment.
All right, well, let me tell you something that's happening under the surface. I got a call from one of my trader buddies who watches the different markets that aren't public, that people go in and do big blocks on. and there's huge blocks coming in nat gas and WTI, so they're smelling something. So it's interesting, you know, he doesn't usually, contact me to tell me about something like that. He's pivot king, but he did, so must mean something because he watches that kind
Absolutely.
of
So,
trading.
so let me tell you a couple of things here about this sentiment. We do have various groups that do not get along together, but all of a sudden, all of them agree on to be bearish on oil. And if you look at the latest International Energy Agency report, they are extremely bearish. And there are several things do not make sense in this report. For example, they depend on the IMF forecast of economic growth. And the
Yeah.
IMF revised their economic growth forecast up. And yet, the IEA revised their oil demand down. That does not make sense. Then you go
Yeah.
into the details and you find out the following. They said that US oil production will grow by 550,000 barrels a day. Not a single person in the oil business will believe that.
Yeah.
This is too high. That means they are increasing supply to support their sentiment, although the data does not support it. But here is the bigger story from the IEA. They expect US oil demand to grow by only 60,000 barrels a day this year. But if you look at the first few months of the year, the demand grew by multiples of that. Multiples. So from where they are coming up with the 60,000.
So I
Then you
mean,
look at 2026.
yeah, you've been talking about electricity demand and blackouts that they're having in the Middle East because of
We will get
electricity.
into that. But
Okay.
let me finish just this point about the IEA. The IEA think that next year, 2026, we will see zero growth in US oil demand. So you see how they manufactured the bearish sentiment. And then they said, oh, we are going to have the largest surplus in history, 1.8 million barrels a day. How we are going to end up with the largest surplus in history? We had COVID, we have lockdowns, we have recessions, and yet we don't have the largest surplus in history. And now I have economic growth, I have growth in oil demand, yet I have the largest surplus in history. So you see how the bearish sentiment is manufactured. To go
Why
back to power
isn't why
shortages,
isn't Trump building up the SPR at these levels?
there are several issues here. I think prices remain very high for the SPR to be filled. I mean, they are filling it
These
anyway. Last week they added 400,000 barrels a day to the SPR, so they did. But even if they do, we have to remember the following: it will take at least
years.
7, 8 years to fill it up, which means
So
that way
it'll never
beyond
be.
Trump term.
Yes, it'll never be filled up again.
Okay.
It's kind of
And
like
we
Fort
do,
Knox, isn't it?
absolutely.
Okay.
So to go back to power shortages, since we have a very limited time here, we are going to see power shortages worldwide. In Europe, in the United States, in several states, Texas, California, I mean, you name it. We are
Yeah.
already seeing the strains right now. There are several reasons for it. The most important reason is AI and data centers.
Yeah.
I'm going to tell you two stories. Probably in the next show, we'll talk about the impact of drought on energy markets. And the reason why I'm mentioning drought, because we have drought in Iran, and that drought basically caused major water shortages in Iran, which led to major power shortages, which forced Iran to reduce its gas exports to Iraq. And now Iraq is having power shortages because they don't have gas from Iraq. And the second example is from Ethiopia. As you know, they built this massive dam on the Nile River. And supposedly they have the cheapest electricity in the world. And the government decided to switch to EVs, completely to EVs, and export electricity to other nations.
Okay.
And because of low prices, what they did not notice is that crypto miners and data centers moved in, and all of a sudden they are screaming, we have power shortages, we have to shut them down. So even in the richest places on earth where we have the cheapest electricity, basically that's being consumed quickly. So we are going to see more power shortages than ever. The third
this
issue.
Is a month. This is a month out here in California. I'm in California, so it's August, September is when they're doing, like, they call them maintenance shutdowns. What they're doing is rationing energy, right?
Correct.
Okay,
Correct.
so pretty uncomfortable when you're in the high desert and it's 95, 100 degrees out there to sit in your house during a maintenance period. So
absolutely, and of course the related news to that, we do have all those strains on the grid in Europe, and we have those heat waves, and all of a sudden, 50 years later, Europeans discover ACs.
Yeah, that's
And
true.
now,
They've been wait. Yeah, most places didn't have them
correct.
10
So
years
now they
ago.
are turning to ACs, and ACs are really
Yeah.
power hungry, and
Yeah.
they consume a lot of electricity, so expect more power shortages. And the last point for today is I would like to go back to the discussion of electric vehicles and peak oil demand. Again, peak oil demand does not make any sense. Those who are talking about peak next year or in the next 10 years, etc., does not make sense because they are using the wrong data. And for China in particular, we have about 50 million EVs in the world today on the roads. Sales, from an oil point of view, we are not interested in sales. You can tell me 90% sales or 50%, whatever those things that the media talks about. This is irrelevant. I want to know how many cars on the road. So we have about 50 million. The impact on oil demand is about 1.3 million barrels a day, and that's it. About 30 million of them are in China. So we are talking about 700, 800,000 decline in demand, or at least replacement of demand in China because of that. The problem
They have no shortages, do they?
Well, they do, because now when you talk about drought, that's why I would like to talk about drought in the next show.
Okay.
Because
All
when
right.
they have drought, the impact is massive because they depend heavily on hydro. So
Okay.
the impact is massive, and the whole world is going to feel it. But the problem with China is they
I
say
agree.
they have 30 million, they
Yeah.
have 30 million EVs, and now we know that some of those numbers are fake. And the reason why they are fake, because subsidies are given to cars sold in China. And because they are given to cars sold in China, they have to create the laws for them and how to literally spend those subsidies, because the bureaucracy is very big in China. So part of the bureaucracy is the car has to have 0 mileage. So the inspector basically has to see the 0 mileage. And someone smart enough said, I can get an old car, 0 the mileage, and show it to him because he's going to follow the law. It says 0 mileage. So they brought in those old cars and they sold them again and again and again and again. And they've been counted as new cars.
Right.
So that's number one. The second scam they played was,
I don't know how you found that out, man. You are a gumshoe investigator.
So the second game they play is that I am a manufacturer. Of course, they have many manufacturers of EVs, and I want to increase my sales and get the subsidies so I can deal with the dealership. The dealership basically can buy my cars, supposedly on paper, and they have to literally issue insurance immediately and a license plate. So they can buy the cars from me. Within 30 minutes, that car is insured, registered. Now I get the subsidies, but I have no buyers because the dealership bought them from me, but there are no buyers. So 30 minutes later, it's on a ship going to Europe or Brazil or any other country. So the car is being counted twice, once in China and once for exports.
Huh.
So even that 30 million basically is suspect. So those who are making the argument for peak oil demand, they are counting all those cars, but those cars do not exist.
Okay, let me make this argument as we're heading towards a close. that natural gas is going to be the bridge between here and nuclear for data centers, crypto mining, for the electricity demand that you're talking about that we're suffering from shortages, and that could be grid issues. But is nat gas the in between? And if so, could it possibly trade at $2 an ounce? It looks like it could be a massive trading opportunity in nat gas around $2.
I disagree. Natural gas is not a bridge to the future.
It's not.
Natural
Okay.
gas is the future.
Oh,
Literally,
okay.
it's the future. And we talk about natural gas, we have to distinguish between the US market and markets outside the
Liquefied.
United States.
Yeah.
So I am talking about LNG. We are bullish on LNG for many, many reasons.
For
In
a
the
long
United
time.
States, the problem is demand will continue to go up, but we are literally supplying it on demand. We do have enough natural gas to supply it on demand for a long time. So
Okay.
that's why prices are not going to increase significantly like we see it around the world. We will see more increase outside the United States than the United States, which means that the United States is blessed with cheap energy for a very, very long time.
That's great for at least the American consumer is going to have a break on heating bills, right?
Relative to others, yes.
Yes. Okay.
Yes.
So
And
major catalyst for higher oil, and I was looking at this too in us, and technically, this was Iran, Israel, Iran, U.S. But we haven't made new lows. We're still putting in a higher low here and now. So if this low holds and we start to head up, maybe back over $70, I think you have 80 in a hurry. Are
I
you looking
think,
for
well,
more than 80?
no, but the issue here that people have to pay attention to is those who are talking about surplus and buying the idea from the IEA, they are missing the point that the supply that the IEA is talking about, the 550 or 560,000, is not there. That supply is not there. And the demand in the United States is higher, and therefore there is no legs for that. The other thing is any trade deal right now with China, and I'm talking about like a permanent trade deal with China, is bullish for oil because it's going to lead to higher economic growth in both United States and China. The last point I would like to mention here is regarding India. As you know, we have Trump tariff. He raised the tariff another 25% because they import Russian oil. And then we have Navarro basically writing this article in the Financial Times about, India should not import the Russian oil.
Yeah.
His information is wrong. I'm saying this publicly. His information is wrong because he is saying that he's promoting the idea that India is buying the cheap Russian oil, refining it, and then selling it and making money. What he needs to know, and in my pinned tweet on my X account, there is an article that is free, so it's public. Anyone can access it. You can see all the charts. India's exports of petroleum products being virtually the same for many years, which means that before the invasion, before the Ukraine invasion, after, before sanctions and after, they're still the same. So the idea that the Indians imported more oil from Russia to re-export it and make money does not make sense because the data does not support it.
Take that, Navarro.
So that's number one. The second one is there are like even Senator Graham basically is talking about reducing Russian exports. This is nonsense because if we end up with really true reduction, oil prices will go through the roof. And India, in particular, imported Russian oil with the blessing of the United States, and we have the evidence is overwhelming. So they did import it with the blessing of the United States. So to punish them
under the former administration.
Well, it is, but at the same time, you look at it the other way. Modi was a supporter of Trump, and they've been friends for a very long time, and they have almost the same ideas, the same policies, the same thing. So they are really on the far right in a sense of politics. That's why we think it's not about Russian oil import. There is more to the story than that. We don't know what it is. It cannot be just the Russian oil. China imported the Russian oil. They did not get the tariffs.
Well, putting tariffs on them is not going to endear us to them. It
Correct, but
just keeps
you have
push them into the BRICS. They're already a BRIC country, so it just makes them feel like they made the right decision. That
Yeah, I
China's more
think there is something
reliable.
about India that we will learn about later on. I think there is more to the story than just Russian oil.
Okay, Pakistan, is that part of the story?
Sorry?
Pakistan part of the Indian story?
It could be. It could be because we've seen what happened, and I think the leader of the Pakistani army is going to have 2-hour lunch with Trump soon. So we don't know what it is, but it could be part of the story.
He's coming to get permission. Really appreciate Anas. Every time you're with me, I learn. And you've edified the F.A.C.E community for years. We can only thank you by telling everyone that has an interest in oil to follow you on X at your name, Anas El-Haji. Go to your Substack, go to your videos. Anas is all over the place. He's being interviewed everywhere. And there's a reason for that, because he cuts through the bullshit. Thank you, Anas El-Haji.
Thank you.
For
Have a
being
good
our
day.
guest today. All right. That's a wrap, everyone. Good luck on Turnaround Tuesday. It is Tuesday, right? And anyway, gold's only up $1.90. Yeah. So they keep selling into it. Be patient. You want to back up the truck on gold, I think you're gonna have some time. You're gonna get a better price level. So remember, everyone, Baraka. Yeah, NASA's great. You're welcome, everyone. Blessings to you guys too. I hope they take you over like a hurricane. Yeah. We love talking to each other. It's the future. Salute. All right, everyone, have a great day. Don't just count your pips, count your blessings. Adios, everyone. See ya. See you, AJ. See you, Golda.